All right, guys, so we have to break down SoFi in this video and go over a key thing that I'm noticing on the charts right now. We have to break that down, go over what I'm looking to do, and later in the video, we'll break down some other stocks and maybe the indexes as the markets just closed about an hour ago. So hit the like button, make sure to subscribe, and don't forget to get up to 15 stocks for Moomoo with at least a $100 deposit, and the uninvested cash you leave on the platform earns 8.1% APY right now. So get on it, guys. Use that link down below or go to stocksurfest.com/moomoo. And with that being said, cheers. Let's dive right into the video. So SoFi ended up having a pretty solid day today, up 1.2% in the midst of a pretty flat day for the indexes. Well, I guess the Russell had a pretty good day, up 1%. But other than that, the NASDAQ had a 0.25% green day. The Dow pretty much broke even, up 0.1%. Same with the S&P as the VIX went down 2.5%, and we had the metals up a little bit, gold up 1%, and we had silver up 0.1%. And again, SoFi did pretty well, up to $6.54 at close, up 8 cents. Let's see, 1.24% to be exact, guys. Pretty good there. And notice how today we took out the highs from yesterday, which yesterday we hit, I think, right around 650, and earlier in the day we hit 636. So notice we took the highs out from yesterday today, and we actually held the lows from yesterday this morning. This morning we hit, it looks like 636 on the dot, which again was the low from yesterday, and we V-shape recovered off that point, and we rallied for the rest of the day. Now let me show you guys a key thing I'm noticing on the charts right now. So number one, on the 5-day, it looks like we're about to test the highs from earlier this week, being about 650, 655, pretty much right where we closed today, right? So if that breaks, we could be seeing a lot more upside. So that's number one. Number two, we're noticing on the 20-day chart, if I zoom in a bit, what is this, guys? This is an inverse head and shoulders, a pretty textbook one at that. Let me show you this. The left shoulder is right here. Boom. You guys see that? The right shoulder, or excuse me, the head's right here. Then the right shoulder is right here. So this is prominent. This is, about to play out potentially. And if we take the highs out from earlier this week, going back to what I said a second ago about 655, 660, right? If we get out of that point, which is also the 180 moving average resistance on this 1-hour chart, this could end up breaking out. And the right shoulder in the inverse head and shoulders, if this played out like a textbook inverse head and shoulders, this could end up going to the high sixes, dare I say, back to $7 per share. And mind you, we're not fully breaking out yet. We're not there, but I'm seeing the writing on the wall, which is why I'm making this video and putting this on your radar because, again, left shoulder, head, right shoulder, pretty obvious. And notice how over the course of the last 2 weeks, we have failed to break out of 660. If I set my alert there right now, give me a second, you'll be able to see that, right? Mark is at we're above 660. Notice how we failed to break out of this orange line. So if we do so, guys, I'm telling you, if we get out of the 180 moving average as well on this hourly chart, this could really start taking off. And it could be a nice trading opportunity at that, guys, at least in my opinion, maybe up towards, like I said, the high sixes. But honestly, we could be going to the $7 range again. 715 is a big resistance point from the 13th of June. 740 was hit on the 12th of June, right? These are some levels that we could end up ultimately going to, right? So, yeah, keep this on your radar, guys. Pretty much that's the main thing I wanted to point out here on SoFi, the fact that the inverse head and shoulders is becoming more and more prominent as the days go on. And let me know in the comments, by the way, if you guys are seeing this, or maybe I'm nuts. Let me know in the comments. I'd love to know as always. And run the likes up, guys. I challenge you at least 100 likes on this video. Smash that like button and don't forget to subscribe. We're trying to get to 50,000 subs subs this year. I appreciate you guys as always. So let me show you some other stocks that I'm looking at very quickly here, as again, we covered SoFi, the main thing that I'm looking at with SoFi. So it looks like we do have a lot of movement in big tech. We had a lot of movement today across companies like Amazon, stocks like Meta, Google, those did very well. Apple even had a 0.5% green day. But let me show you some stocks that maybe aren't doing so well. We had Micron report earnings. I'm sure you guys saw it. Maybe you didn't. They reported earnings yesterday, right? And their stock heading into earnings took a bit of a hit from 158 to about 138. So heading into earnings, we were already down 12% in correction territory. The earnings came out, and now we're down another 7%. So it went down 7% on the day, and Micron closed at $132 per share, which means it's almost in a bear market. It's down now 16.5% from the recent high. So let me show you this, guys. Micron, from what I read earlier, they double beat, and their guidance was pretty solid for the current quarter. Let's see here. Adjusted EPS, 62 cents, which beat the 49 cents. All right. Sales, 6.81 versus 6.63, so double beat there for Micron. And they see adjusted EPS of $1 to $1.16 versus $1.05 for the next quarter, on revenue of 7.4 to 7.8 billion versus 7.6 billion. So pretty good guidance. Nice double beat for Micron, but maybe it wasn't enough of a beat for for the stock to go up. So again, we're noticing it's almost in a bear market. We do have a death cross here, and no signs really of a recovery yet, although the 4-hour chart still looks really good. We're above the 180 moving average. Obviously, nobody's denying that we're holding the uptrend. Obviously, we're holding the uptrend, right? So let's see if we get some sort of bounce here, maybe at 125, 130, in this general range. So MU, Micron, keep your eyes on the weakness. My eyes are peeled on this stock. And Nvidia ended up going down almost 2% today, and it looks like people bought that dip too quickly, at least as of now, right? We had that big dump to 116. A lot of people rushed in, obviously, from 116. It ran to 130 pretty much, and now we're back to 124. So we did give back some of those gains. We're down about 4%, 5% in the past 2 days. And yeah, I mean, it looks like we do have arguably a head and shoulders here. We talked about an inverse head and shoulders on SoFi, but here on Nvidia, does it not look like a regular head and shoulders kind of in the making? You guys see the left shoulder. You guys see the head right here. Boom. Then the right shoulder right here. That's kind of what I'm seeing. So I would not be surprised by the looks of the charts right now if Nvidia did come back down to test the 180 SMA at $110. Maybe it went even lower, right? Who knows? But the way I'm looking at Nvidia here is, no doubt there's a lot of future growth potential, no doubt about it, but how much of that is already priced in? I don't know. And the way I'm thinking about it is, look, if I didn't buy the stock, or if you didn't buy the stock at $750, $800 in this range when we were consolidating for months pre-split, why would you buy it now at $1,200 post-split, right? If you passed up on it here, now it's here, and just because it's split, you're buying it, it just doesn't make sense to me, right? Not saying that Nvidia is a bad buy or a bad company, just the psychology behind it, it just doesn't make sense, right? People were, avoiding it here, but now they're buying it here just because it's split, right? It doesn't make sense. So for me, I'm staying away from Nvidia. I know that might not be a popular opinion right now, but I'm staying away from it for now at these valuations. Not that it's a bad company, but I think it's a bit too frothy at this valuation. But if it were to come down to, let's say, $80 to $100 a share, all right, I'll consider nibbling a little bit. But at 120 to 140, I mean, it's just way too overvalued. Maybe not overvalued like crazy, but the risk reward is just not, it's just not there. It's not as attractive as it once was at a $3 trillion market cap, guys, at this point. You're not going to buy Nvidia and make 10 extra money from here, right? If you think it's going to a $30 trillion market cap, you have another thing coming for you, man. Maybe it does double up from here totally in the cards. Maybe a triple up if things get crazy, right? But if you think you're going to make a ton of money on NVIDIA, the ship, I don't want to say has sailed, but the big move has already been made, and that's pretty obvious, right? There's other AI plays that I like more that are smaller companies, smaller valuations, where that 5-bagger, 10-bagger is still there, but with NVIDIA, I don't know, man. I don't know. I think you're chasing it if you're forcing the buys right here. That's at least my opinion. I don't know. What do you guys think? Let me know your thoughts in the comments. Smash the like button. And do not forget to get up to 15 stocks for Moomoo with at least a $100 deposit, guys. And listen to this. Your uninvested cash earns 8.1% APY right now. So use that link down below or go to StockSurfS.com/Moomoo. Get your money. And with that being said, cheers. I'll see you in the next video.